So Palantir delivers earnings on Monday. Huge event for the Palantir community and an even bigger event for Palantir as a company. These are the most important earnings in the history of Palantir. That is because Palantir is literally in an uncharted territory now. We have never seen this before. Every time we've seen earnings from Palantir so far, it came after disappointments. So we had a surprise, great earnings, and then we had another great earnings. And now everybody's looking at Palantir and saying, well, look, they had two GAAP profitable quarters. They really did well for the past 2 times they delivered results. Can they sustain the success? Can they stay consistent? It's not that easy. Now, the expectations are very high for Palantir for this quarter, which means that if they fall short, the disappointment is going to be very big and the share price is going to be absolutely insanely impacted by any negativity. Now, in this video, I want to talk about 2 things. Number 1, what's going to happen with the share price around earnings? And number 2, what I'm personally looking at on the business metrics of the earnings, what I care about. Now, let's start with the share price because, this is what most of you are here for. Let's not kid ourselves. So as far as the share price, look, the share price is going to be extremely volatile. Palantir is known to be a volatile stock. It reacts very violently upwards and downwards. You've seen it happen year to date with a 180% spike, but it also has that downside. If the results are not good enough, it's going to have a very painful negative drop. It can drop all the way to 14, 13, who knows? Palantir, you never know where the floor is. It's one of them crazy games, You never know how far you can fall. Now, again, if the earnings are great, we might see Palantir spike to 20, 21, 22, who knows? But here are, I think, the key metrics. And I think if Palantir can hit those, we almost certainly are guaranteed to have a spike upwards after earnings. But no matter what happens, it's going to be a volatile time. It ain't going to be flat. So Palantir needs to probably hit between 550 and 600 million in quarterly revenue. That's not going to be easy. They cannot fall behind that 18% growth. If we see another quarter of declining revenue growth, last time they had 18%. If we have anything below 18% growth, it's going to be a red flag. And a lot of people are going to use this for negativity around Palantir. So the benchmark is about 550 to 600 million in quarterly revenues and 18% or above of revenue growth. They cannot fall below 18%. It's not going to be good. Of course, we're going to be looking at the guidance. We cannot see the guidance coming lower. If the guidance comes even lower again, it's going to have another negative impact on the share price. Obviously, we want to see the share count, the share count obviously drop with the SBC. The stock-based compensation, everybody talks about the share count, the stock-based comp, the dilution. That has been coming down significantly, especially if you look at that as a percentage of revenue. Palantir has been dropping their SBC, the stock-based compensation. We want to see that trend continue. If stock-based compensation keeps jumping up again, like it did in the couple of years before that, it's going to have another negative impact. Of course, we want to look at the net dollar retention. Palantir has been losing net dollar retention for the past 4 quarters. They started with 119. They're currently at 111. It's a far cry from Snowflake. We want to make sure that the net dollar retention, the amount of dollars customers spend in the following year, goes above 111%, which is what they are right now. The customer count has to keep going up. Obviously, we have to look at about, let's say 300 US commercial, and overall we want to see 450 clients. That has to be the benchmark for Palantir. They have to make it. Obviously, the balance sheet has to remain strong. 3 billion in cash. We want to see a little bit an increase in that. Free cash flow has to go up. And of course, the 2 main issues of Palantir has to be a little bit addressed in the sense of, the management either has to talk about it or show results, which is number 1, geo risk. Palantir is concentrated in the United States. We want to see a little bit more of an expansionist kind of flow of money, not just one single country. And the other thing is that, their top 20 clients are absolutely impressive. We want to see more growth in that, obviously. So they delivered 50 million per client per year in the previous quarter. That's the average. But that also means that the top 20 clients are basically driving the entire business. We want to see a little bit more disbursement, less client concentration on the business side of Palantir. Of course, these are not things that are going to be solved overnight, but we want to see the trend get a little bit better in this. This is specifically the things I'm going to be looking at. But if you ask me what Wall Street is going to be looking at, look, they want to see revenue growth not below 18%. They definitely don't want to see any guidance that goes below the current growth rate. And they want to see about 550 to 600 million of revenue in the quarter. That's, I think, where the benchmark is going to be for Palantir. But here's the most important part of this video. And this is the crazy part. If you ask me why I've never sold Palantir, even when it dropped to $7, when everybody was screaming that the world is coming to an end and the stock is about to go bankrupt and all that stuff. Well, look, the best investors, the best long-term investors in the world, they have one thing that they work with, which is much better than anything else anybody else has. Basically, there's one thing that separates the world's greatest long-term investors from, the normal folk. And that is the ability to sustain and absorb and digest, whatever you call it, red days. Whenever you have red days, it unfortunately is true, 90% of retail investors, they freak out. And if you have 2 red days, God forbid, well, that's the end of the world. And if you have a red week or a red month, oh my God, it's time to move to New Zealand and sell all your portfolio and become a sheep herder. You know what I mean? So the best long-term investors, they get to neutralize that. And I think you can do it as well. Again, I posted this. You don't need my Patreon for this. You don't need to buy anybody's Patreons for this. You just need to listen to what I got to say right now. It's absolutely free advice. If you want to, master the art of sustaining red days, because if you can sustain red days, you will be able to buy the dip when necessary and not sell out. Because a lot of people missed out on Palantir. They sold out when it was $7 and $8 and they missed out on the opportunity. So the way you do it is very, very simple. Number one, you have to have a process. You have to have a discipline. So that process is very simple. Find the method that works for you to evaluate good companies. You can use a DCF model. You can use multiples. You can use whatever system that's proven and objective to evaluate good from bad. Once you know your good stocks, make sure you have a process to invest automatically, like a robot, without emotions, into these good stocks. Now, I use the DCA method with an asterisk, a DCA that goes up, double DCA, when the share price drops below a certain threshold, let's say 10% off the 52-week high. But you can use whatever it is works for you, as long as it's objective, as long as there's no emotions. And just stick to the plan. The most important part is discipline, 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 discipline. It's like the same thing when you go to the gym. Discipline is everything. If you pick good stocks and you DCA during the bad times more, and you keep DCAing during the good times a little bit less, and you just stay consistent and take emotions out of it and ignore the red days, then you'll be fine. You don't need Patreon for this. Do not sign for anybody's course. This is not very complicated things. The main part of this is just discipline, because learning how to do DCF you can do online for free. Learning how to use multiples you can do online for free. Learning how to DCA you can do for free. There's no need to pay anybody for this. Just learn the skill, understand the discipline, trust the process. You'll be able to see these, red days like a bug on your freaking windshield. Now, congratulations to the Palantir community for 180% year-to-date success. I mean, it's absolutely insane. I mean, I love to see that. We're still down from the highs. I mean, the stock was in the 30s back in the day. There's still a long ways to go. I believe this is a $1 trillion company in about 5 to 10 years, but who knows what happens in the next week, month, or year. It can be extremely volatile. If you do not 100% believe that Palantir is the next best company since Tesla, it's the next $1 trillion company, and you think that this statement is ridiculous, do not invest. It's very, very simple. This isn't the stock for you. For me, it is. Again, this is not financial advice. My own personal opinion, my own money. I'm just sharing my thoughts and ideas. Obviously, do your own research. But that's true for any stock. If you don't believe, if you don't have faith, if you don't have genuine conviction about a stock, don't invest. Don't play the greater fool theory. Do not try to time the market. It's not going to work. Very, very simple. Good luck in the earnings.